All right, well, we got a number of stories we're tracking this morning, including the latest quarterly results from Nvidia, the AI chip darling, reporting its latest set of quarterly results last night. Growth, once again, was huge. In terms of the stock market reaction, I would say it has been muted but positive as investors are thinking about where Nvidia goes from here. To answer that question, let's bring in one of the most colorful characters on Wall Street, the one and only Dan Ives, head of global technology research at Wedbush Securities. Great to see you, Dan. Obviously, a lot of different opinions on Nvidia after hours, and I wonder if part of that is just because the spotlight is shining so bright and the stock has had such a big run.
Yeah, look, I mean, high expectations, right? But if you look at fundamentally what happened here, I think this was just a robust quarter that shows that a lot of the deep-seek worries, that was smoke, no fire. I mean, these are numbers that show this AI revolution is actually just hitting its next gear of growth. And there's only one chip fueling this, and it's the person wearing the black leather jacket. It's the godfather of AI, Jensen Nvidia.
You know, it's interesting. Speaking of Jensen Huang, I think it was almost a year ago when Nvidia unveiled their next generation of chips, Blackwell, with a lot of fanfare. And there was a very aggressive push by Nvidia to get that product into the hands of customers because it's sophisticated, it's powerful. For the Wall Street fans, it's very expensive and there's a lot of demand. But I think it seemed like the takeaway from last night was to get that product into the hands of customers quickly and efficiently came at a short-term cost. And NVIDIA's message last night was, yes, that hurts our profit margins in the short term, but people love the product, demand is great, and over time we'll make up whatever costs we had to incur in the short term. Was that your takeaway?
Oh, yeah, I mean, and that was a great summary, but let's put this in perspective. If you go back 2 quarters ago, the view is this would be 3 to 4 billion a quarter. It was 11 billion. And ultimately, I think it's going to be on a trajectory to 15 to 20 billion per quarter. So I think it just shows in terms of any sort of the margin deterioration, that's something that's just going to continue to ramp. And that's why I think 175 base case, $200 bull case in terms of NVIDIA. And look, the haters hate. They're always going to try to poke holes. They've missed every transformational tech stock the last 20 years. I believe they'll miss NVIDIA, and we believe in the rise to 4 trillion market cap.
When you talk about a Wedbush target price in the range of 175, and you're alluding to maybe even more potential upside for a stock that begins the trading day in and around 130, what are the things you have to watch for in between the stock, in your opinion, getting to that level? Could we see more volatility?
Look, of course you can see volatility, and you look at export controls, every 5 minutes something coming out of Trump in terms of tariffs. There's going to be a lot of noise. You got to see through it. You'll have the big conference NVIDIA has next month. And look, 15 to 1's demand to supply in terms of these chips. And when it comes to DeepSeek and some of the others, I view that DeepSeek is actually bullish for NVIDIA and the broader AI revolution. John, it's about the multiplier effect. It's not just about NVIDIA. For every dollar spent on NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's why this is going to be a tech bull market going forward.
I want to take a quick second to ask you about another technology story we're watching this morning, Dan, and that is Salesforce. And what's interesting is that shortly after DeepSeek got the market excited and opened up this idea of maybe AI not costing creators as much, all of a sudden people started focusing a little bit more on the software names, saying, hey, that's not bad for them. That'll give them an opportunity to integrate a lot more AI faster. And Salesforce was already pushing quite aggressively into the AI realm. Investors really liked that news at the time. It looks like the reaction to the quarterly results is a bit cautious. What's your general takeaway on software companies like Salesforce?
I think they're a table pounder. I think these are names that you just buy them aggressively on these types of dips because the AI story is the future. I mean, that's gonna monetize this whole massive install base. Benioff leading. Look, are they going to be conservative out of the gates? Yeah, but I think that's set up for just beating raises. I ultimately believe this is a $400 to $425 stock a year from now.
And for people who hear this stuff, Dan, and they say, but tech's had such a big run, what about the fact that, other parts of the market haven't done as well, and I'm trying to put together a portfolio that will serve me well through retirement. Dan Ives says,
you focus on growth. You want to be exposed to the biggest tech transformation we've had in the last 40, 50 years. I'd rather pay out for the Ferrari in the left lane, going 100 miles an hour, than be in the minivan value 40 miles an hour in the right lane, going to, with a broken radio. So the point, that's my view where this market's going.
We will, on that note, keep our eyes on the road, and we look forward to hearing from you again soon. Thanks, as always, for some exceptional analysis. Dan Ives from Wedbush.